This script reads like a high-stakes financial thriller, perfectly capturing the economic collapse and secret history vibe you cultivate for your channels. Here is your text broken down by sentences for easier reading or teleprompter use. The Intervention Zone Script Breakdown. Forget the $6 million man. Let's talk about the trillion-dollar panic happening right now behind closed doors. While the public is hypnotized by a ticker symbol flashing $110, the real power brokers in Manhattan are sweating. The New York Federal Reserve has started panicked position checks with major currency dealers, not because they care about your silver profits, but because they are staring into the abyss of a dollar index collapsed to 9716. This isn't just a price spike, it is a systemic seizure. We are standing less than 48 hours from a Federal Reserve meeting that has abandoned all pretense of routine policy and shifted entirely to survival mode. With whispers in Washington suggesting a shock midterm replacement for Jerome Powell, the autonomy of your money is dissolving. This Wednesday won't be a standard press briefing. It will be a violent collision between paper delusions and physical scarcity. The mechanics of the collapse. If you are still trading based on historical charts, you are navigating a minefield with a map from the last century. To endure what is coming this week, you have to ignore the noise and focus on the lease rates and the Shanghai spread. I've spent the morning dissecting the supply chain fractures that prove $110 silver is not expensive. It is mathematically mispriced in a world shedding its reserve currency. Before the Fed tries to weld the exit door shut this Wednesday, you need to see the raw data they are desperate to obscure. This is what we uncover here at the Secret History of Currencies. The liquidity trap. Consider the timing. Silver breaches a historical ceiling, and instantly, the Fed is burning up the phone lines regarding the currency market. Why? Because the separation between these assets is an illusion. They are tethered by the same fragile liquidity, and when the silver thread pulls tight, the entire dollar web begins to snap. The imminent danger isn't a price correction. It is a total cessation of trading. A liquidity freeze is the nuclear option to save the dollar index. Right now, the DXY is bleeding out at 9,716, a critical support line. If that floor gives way, the confidence crisis of 2008 will look like a dress rehearsal. Geological reality versus paper illusion. Let us strip away the sentiment and look at the cold hard math that proves this isn't to speculation. While traders high-five over $110, they are blind to the geological reality that makes higher prices inevitable. The secret lies in the origin of the metal. 75% of global silver isn't mined for its own sake. It is a byproduct, a chemical afterthought of digging up copper and zinc. This implies a terrifying supply inelasticity. When silver jumps 250% to hit $110, the miners' is turn a dial to produce more. They only dig for silver if they need more copper. If the copper market doesn't need the supply, the silver stays in the ground. This is why $110 is cheap, even if miners wanted to chase the profit. Building a primary silver mine takes a decade. Any new supply triggered by today's price won't arrive until 2035. Until then, we are starving for metal in a market that cannot be fed. The margin massacre. This brings us to their weapon of choice. The margin massacre. Here is how the controlled demolition works. When volatility spikes, the exchange hikes margin requirements, the cash deposit needed to hold a contract. It is a mathematical formula, not a conspiracy, but it works perfectly to flush out the little guy. Imagine holding 10 contracts and waking up to a demand for an extra $180,000 cash. You don't have it, so the computer sells your position automatically. When this happens to thousands of traders, at once prices crash. History says 20% of open interest could be wiped out in 72 hours. That's 170 million ounces of forced selling. The price drops $20. Headlines scream, the bubble has burst, and the smart money swoops in to buy your liquidated silver on the cheap. The final countdown, the wealth transfer, is happening now. Weak hands are being shaken out by design volatility, while strong hands accumulate the physical reality. Wednesday at 2 p.m., the statement will drop. Whether they admit the crisis or paper over it, the math remains undefeated. $110 is cheap. $5100 gold is the anchor. The dollar is the Titanic. You have 48 hours to decide, are you betting on the paper illusion or the physical truth? The New York Fed is panicked. The East is buying. The margin trap is armed. Choose your side carefully, because the window to act is closing.